get ready for a major financial crisis, and it hit the following year. I think gold surging like this every day, going up. This is the best year for gold since the 1970s. This is not a coincidence. You know what happened in the 70s. And so I think this is a warning sign. The real crisis could hit next year when we see a big collapse in the dollar against other fiat currencies and a big break in the bond market, meaning much higher interest rates at a time where our debts are exploding. In the 1930s, Trump is stacking the Fed. And that's one of the reasons that gold is $4,200 an ounce. And, you know, it was just a week ago that gold hit $4,000. It's up $200 in a week. If it keeps up this pace, it'll be at $5,000 before Thanksgiving and over $6,000 by Christmas.
Gold is breaking records, the dollar is weakening, and inflation is quietly eating away at real wealth. Investor and gold advocate Peter Schiff connects the sharp rise in gold with growing political interference in monetary policy, particularly Donald Trump's push to control the Federal Reserve. He argues that this lack of independence fuels reckless money printing and rate cuts, undermining confidence in the dollar and driving investors toward gold. The result, he warns, is a historic surge in the metal's price, which recently jumped from $4,000 to $4,200 in just 1 week. If this momentum continues, Schiff predicts gold could hit $5,000 before Thanksgiving and climb past $6,000 by Christmas, a trajectory that signals deep cracks in the financial system. At the same time, Schiff highlights the fragility of assets many still consider safe, such as U.S. treasuries and cryptocurrencies. He argues that treasuries are vulnerable to inflation and dollar debasement, leaving holders exposed to real losses. Schiff suggests that the recent strength in gold may be pricking that bubble, warning that an abrupt collapse in crypto could be the next domino to fall. By expanding the money supply, governments create the illusion of prosperity while eroding real wealth. Schiff underscores this with the long-term decline of the Dow Jones when measured in gold from 45 ounces in 1999 to just 11 today, a 75% loss in real value masked by inflated dollar figures. For him, this disconnect proves why gold's surge is not only justified but also a clear signal of a much larger financial reckoning ahead. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
The government creates inflation. It nurtures it. Inflation is the government's baby. I mean, it's their silent partner. But the government never wants to come out and tell the public that it's causing inflation, because obviously the consequence of inflation is that prices go up, and the public doesn't like that. But government creates inflation. The definition of inflation is an expansion of the money supply and credit. Who expands money and credit? The government does that. So the government creates inflation. The result is prices go up. But why do they create inflation? Because they don't want to raise taxes to pay for all the deficits, so they print the money. And the public doesn't realize that they're paying the cost. But instead of paying it in taxes, they're paying it through higher prices, through inflation. Plus, also, inflation makes everybody think they're richer, right? The numbers, look at the stock market today. Everybody is talking about the record high stock market. The stock market in 1999 was worth 45, the Dow was worth 45 ounces of gold. Today it's worth 11. So the stock market in 26 years priced in real money, because once upon a time when you bought the Dow, like if you bought the Dow in 1920, you paid with gold dollars, you paid with real money. But so measured in real money, the Dow Jones has dropped 75% in 26 years. But, you know, the people don't realize that because they're measuring the Dow with inflated dollars. And that's why it's, 46,000. Trump wants to make it worse because Trump wants to completely control the Fed from the Oval Office. He basically, he's stacking it with his people the way Roosevelt stacked the Supreme Court in the 1930s. Trump is stacking the Fed. And that's one of the reasons that gold is $4,200 an ounce. And, it was just a week ago that gold hit $4,000. It's up $200 in a week. If it keeps up this pace, it'll be at $5,000 before Thanksgiving and over $6,000 by Christmas. Yeah, what people have to recognize is, yes, you could be a billionaire today, but if you have your billion in U.S. treasuries, you could be broke tomorrow. So what's key is where, no, but it's like, where am I going to, where
bored, silly of it.
Where am I going to put my assets to preserve their value? Not necessarily looking for the best new thing, but looking for a way to protect yourself from the dollar debasement, from inflation. That's what people should be focused on. And you guys, could just watch out for this over the next several weeks, couple of months. But I think what happened on Friday, late in the day with the tokens and Bitcoin. I don't know if that was a one-off thing just related to Trump's post. That could be just a dress rehearsal for what's about to happen in crypto. It's possible that gold is pricking that bubble. And I think the risk is high right now of a major crash in that market. I mean, probably higher than I think the risk has been since I can recall, that the bottom could just drop out of this market. You have so many people so bullish, so long, so leveraged, thinking nothing can go wrong. And to me, it looks like it's an accident waiting to happen.
Peter Schiff distinguishes between digital representations of gold tokens backed by real ownership of the metal and Bitcoin, which he sees as fundamentally speculative. He noted that Bitcoin has fallen over 25% against gold since August, even as gold and silver have surged to record highs. For Schiff, this divergence underscores the weakness of Bitcoin as a so-called store of value compared to gold, which is benefiting from global de-dollarization, rising deficits, and a Federal Reserve cutting rates despite persistent inflation. In this environment, central banks and large investors are shifting their reserves into gold, reinforcing its role as the ultimate haven. At the same time, Schiff rejects the idea that gold's rise is disconnected from inflation or systemic risks, as some commentators claim. He draws a historical parallel to 2007, when the subprime crisis was dismissed until it erupted into the 2008 meltdown. With gold experiencing its strongest year since the 1970s, Schiff believes the metal is signaling deep economic instability ahead. He warns that the coming year could see a collapse in the bond market, sharply higher interest rates, and a severe dollar decline, all while U.S. debts spiral out of control. In his view, gold's rally is not a coincidence but a warning bell for a looming crisis. Let's get back to the interview.
I think this is really kind of a put up or shut up moment for Bitcoin because, for years it's been hyped up as digital gold, as a hedge against dollar debasement, inflation. And Bitcoin is now in a pretty big bear market priced in gold. It's down more than 25% as we speak from where it was in August. And so gold is making record highs. Silver is breaking out to record highs. The world is de-dollarizing. Massive deficits as far as the eye can see, a Fed cutting rates and the rising inflation. All this is very negative for the dollar. And central banks are getting out of dollars, but they're buying gold. Bigger investors are now starting to look for hedges, and they're buying gold. And what's Bitcoin? I mean, if Bitcoin is not a store of value, if it's not a safe haven, if it's just a tech stock, well, what kind of tech stock is it when it has, not only does it have no earnings, because there's some tech stocks that also don't have earnings, but it has no prospect of ever having earnings. At least when you buy a tech stock, you're betting on the potential for future earnings. Bitcoin has no potential to earn anything. I mean, 2 points on digitized gold. The good thing about it is it's actually still gold. It represents ownership of real gold. And what digital gold does is it improves on the monetary properties of gold. It makes it more fungible, more portable, and better to use as a medium of exchange. Right. I'm talking about real gold that you own, but you own it through a token that you can exchange with other people. But yeah, I get it that the Trump family has taken a big stake in Bitcoin. That's another problem I have with the Trump administration. But, I think that the biggest consensus trade right now, where you have the most can't lose, only can go up attitude, is in Bitcoin for the reasons that James just mentioned. It seems like everything has gone right. There's nothing that can possibly go wrong. And that's when the market goes in the other direction. And I would say that given all that Bitcoin has going for it, as far as hype and the politics behind it, with all that, why isn't it going up now? Why is it going down? Why is it collapsing? I think that's a warning sign that the bottom's about to drop out of this. Bitcoin and gold going up for, I think, different reasons. But, I was just listening to Scott Bessett was interviewed just before we started talking, and he was asked about the rise in gold and if he's concerned about it. And he completely brushed it off and saes there's nothing to worry about.
Peter, do you like gold? Are you interested
well, of course, but let me finish my point here. But Scott Bessett basically, no, we don't. It's not a warning sign. Everything is great. We're cutting government spending. The U.S. economy is great. Inflation is gone. So gold's going up for reasons having nothing to do with inflation or loss of confidence in the U.S. I mean, completely delusional. And then he went on to praise Alan Greenspan as the maestro, as a great Fed chairman, without even realizing that Alan Greenspan is the main reason we had the 2008 financial crisis. It was his reckless monetary policy that fueled that housing bubble and the mortgage finance bubble. And yet he doesn't even get that, because he wants the Federal Reserve to do the same thing that Greenspan did. He wants rate cuts and more money printing. And he has no idea that the crisis that's coming is going to be much worse than the financial crisis that the Fed helped create before. This is going to be a sovereign debt and a U.S. dollar crisis. And I think what's happening in gold right now is very reminiscent of what happened in subprime in 2007, which really was, foretold the '08 crisis. And when that warning bell went off, nobody believed it. Nobody on Wall Street, nobody at the Fed. Ben Bernanke said, don't worry about subprime. It's contained. And I was saying, nope, this is the tip of an iceberg. Get ready for a major financial crisis. And it hit the following year. I think gold surging like this every day, going up. This is the best year for gold since the 1970s. This is not a coincidence. You know what happened in the 70s. And so I think this is a warning sign. The real crisis could hit next year when we see a big collapse in the dollar against other fiat currencies and a big break in the bond market, meaning much higher interest rates at a time where our debts are exploding.
Gold's surge is more than just a price movement. It is a signal of growing distrust in the dollar, unsustainable government spending, and reckless monetary policy. While cryptocurrencies and treasuries carry significant risks of collapse under these pressures, gold continues to stand out as the reliable measure of real value, just as it has during past crises. With rising inflation, mounting deficits, and increasing political interference in central banking, the accelerating demand for gold suggests that the global financial system is approaching a breaking point, and the coming years may bring the kind of reckoning that past warnings have long foreshadowed. Is gold's surge a short-term spike or a sign of a deeper shift away from the dollar? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.